let's have a look at the 4 majors morning, starting with the euro against US dollar using the FX8 Ultimate template. Okay, so the daily in the chart here, euro against US dollar daily. What did we see yesterday? We saw some upside movement on the institution moving average. I told you yesterday we saw a confluence of all these moving averages working together here, finding support, moving sideways. So consolidative, you can see we're not really making any true highs or true lows recently. Price has been very, very consolidative in this area. However, price is still maintaining above the long-term Fib retracement area in the shape of the 38.2 mark. This is my monthly high to my monthly low across a number of years, has given me this Fib retracement here in red. However, my daily or my weekly Fib retracement is this 31 over here. So 38 to the 238 time frames are pretty much together, and you can see how price has been trading within this band. So once it's attempted to get about this band on 2 prior occasions. However, once it did that, it didn't have the follow through to actually maintain those highs, and subsequently fell back and then retested the current low here at the 38.2. Still finding support above it. So on a positive, you can see the last candle we had on our daily is still blue. The candles are blue. Okay, and the most important thing, we're looking at the RMO across the board here. You can see quite clearly it is all blue. So on every single time frame, the RMO is above the 0, which tells you we're in a positive trend. And our moving average indicator down the bottom here, which is the institution, bar the weekly, is telling us we are in a positive trend. So fantastic. Now you can see on our shorter term time frames of 5, 15, 30 minute, we have a bit of buying sentiment coming through on those time frames. There's not very much red, so the overall indicator on this is that we should be looking for a positive upside. The only problem we have at the moment now is the fact that price is trading quite close. If I just zoom in to the 38.2 resistance level here at the top, all the moving average below, fantastic. The RMO has dipped slightly, so as long as it maintains above the 0, and the MACD has also just gone through the 0 line at the moment now, so there's no sentiment. What we want to see is the top side here being broken, so we do need to see price trading above the 38.2 level here, which is at the 13172 mark. Get above that and close. Perfect. The next step after that would be to see price actually finding support. You can see we actually saw a support candle here. However, you can see there was negativity. Price actually falling at the low end of that candle. Let me just turn it to show candles. You can see a wick, and then we had a bearish engulfing candle, which told us this was negative sentiment here. So we want to see a bullish engulfing candle close above the 38.2 now on the daily, find support, and then hopefully by the end of this week we'll get an indication that price wants to head up to the upside. The only downside at the moment now is if we fail to see euro breaking this level anytime soon, the more she finds resistance here, and the more likelihood is price is going to roll over. And if that is the case, we want to see price closing below the 38.2. So here, no trade on the euro against US dollar, primarily because we're trading in a consolidative range, and primarily we're not going to be seeing any pip returns because we are seeing consolidation. So here, I'm going to put a trigger alert below my 38.2 on my daily, and a trigger alert above the 38.2 here on the upside, and wait for price to actually close above these areas here to give me an indication. Onto cable, sterling against US dollar. You can quite clearly see this particular pair has been an uptrend since the early part of March of this year. However, near term trading into a Fib retracement area in the shape of the 50% retracement of the weekly highs to the lows. 23.6 Fib retracement here from our monthly highs and lows is below price, so it's looking positive, supportive. RMO is above the 0 line. MACD has just crossed over into the red. However, we're still above the overall monthly target Fib retracement area, which is still positive. We are still seeing higher swings, which is important. The only thing we have at the moment now in near term is this consolidative area here. You can quite clearly see we've had a number of days, 1, 2, 3, 4, 5, almost an entire week of resistance here, and because of that, price is now pulled back. How far is she likely to go to? You can see quite clearly we have a red arrow now above this candle, but this candle will have to close first, and then the candle would have to go red, and then we would need to see that sentiment showing on the chart. If that's the case, near term, then we should be looking to the downside, with ultimately where we are trading now towards the prior 38.2 Fib retracement area at 85 pips away. So there's a bit of profit to the downside. Price is trading into a consolidative range right now. Get below that this afternoon, then you should be heading into the price support and resistance level here in the shape of the weekly Fib retracement area, and that would be our target, which is 80 pips away. Okay, so intraday we want to see more negativity, and the R squared needs to actually complement that. At the moment now you're seeing a lot of buying and selling, and R squared is flat in most cases, so there's no true sentiment coming through. So as it stands at the moment now, the more resistance above, you should be targeting the downside. The quicker she gets above the 50%, then we can start targeting back up towards the institution on our daily, which is a good, we take it as a good 180 pips away. So wait, be patient, get a bearish engulfing candle here. We should be looking for negative sentiment to follow through down to the downside. That would be our next target, because primarily that's where prices just come from. We had a prior resistance level here, the breakout, the continuation to the up, failed to get above that, it's going to pull back to the downside. So look for these areas are roughly around here for target intraday. US dollar Swiss franc, you're seeing a lot of negativity on the intraday time frames, and the R squared, especially on our 5, 15, 30 minutes, complementing that negativity intraday. And you can quite clearly see that the candle, as we speak now, on the daily is looking one of negativity. It's actually engulfed the whole of yesterday's candle already, and that's come quite close to the swing low. Notice price actually failing at these highs around here, has reattempted these highs recently but failed, and subsequently formed a lower swing. And you can see where price is trading now, quite close to this trend line support or resistance, apologies. And as we get close to this, you're going to find that price is going to be consolidative. The one thing to remember here though is, if you look at our institution, our daily, they're still below price. However, our two moving averages are pretty much flat, going sideways, showing you there's no genuine trend alert on this particular pair. As you can quite clearly see, these highs of here, RMO was clearly looking to the downside, reattempted the prior high, but the RMO was noticeably lower than the prior high. So telling you that sentiment is looking for one of negativity now and is moving back to the zero line. RMO is just above the zero line, but the MACD is above. So we're getting, it's still positive, however, very, very tentative. You can see quite clearly on our moving averages of here, we have a mixed result. Some above, below, no true direction. The monthly and weekly are still looking negative. However, our daily institution is below price now. However, 4 hour, very, very mixed signals. Okay, you want the RMO and the moving average at the bottom here to complement each other, and that's clearly not the case. But so we're seeing negative sentiment on our intraday time frames, and you can quite clearly see that we are seeing a bearish engulfing candle forming as we speak on our daily. There we go. You can quite clearly see yesterday's candle, a lot of wick, showing a lot of indecision. We have a buy arrow. Candles are blue. However, you can see the candle as we speak now is in white, which is colored, which means it's bearish, and it's now pulling back. So if we see this candle closing low, then ultimately intraday this negativity will start to continue, and then we should be targeting back to these prior lows that we've just come from, particularly the institution moving average, which will be our 23.6 February tracement area. So as it stands at the moment up, I just zoom out so you guys can see the clear picture of this. 23.6 is our monthly February tracement area from the all-time high to the current low, and the ones in yellow are my weekly February tracement areas, and these are most important resistance levels here. Don't quite need at the moment because we are trading well below, so you can quite clearly see as it stands at the moment now, if price was to trade below the 23.6, then we should be targeting back down towards the 38.2 level over here, and then down to the 50, etc. to the bottom. So you can see quite clearly here near term the RMO is dropping, MACD is still just above the line. Okay, so as it stands at the moment now, very mixed signals for the US dollar Swiss franc, which is not a really great cause. We do need to see if this is to be positive, because you can see we've clearly bounced just recently. Then it needs to be getting above this level over here, which is above the prior swing low, which is you're looking to be comfortable with this above 9.4, the 875 mark. So at the moment now, I'm not trading this particular pair because there's no clear direction on this particular chart. Intraday is negativity, and I'll wait to see how that forms continues, and if likely we should be targeting back towards the institution, back towards the 23.6 February tracement, which is to the downside, which is a good 80 pips away in total. Last pair of the day is US dollar Japanese yen. This particular pair has been trading in a very strong uptrend. However, near term we can see quite clearly we're trading into a major resistance level. So this is the third time now. Yesterday's candle we had a buy signal, but we're trading, or a buy signal right at resistance. Yesterday's bearish engulfing candle at this resistance now tells us we should be looking for potentially downside, and that's reflected on our chart. You can quite clearly see a lot of negativity, and our 5 and 15 minute, the R squared is complementing that negativity to the downside. Our 30 and hourly are still not looking all that great. There's no sentiment as yet, and our institution moving average down the bottom here is pretty much below price. So we could target, if we're looking for negative sentiment to the downside, target your institution on this particular time frames as your first target, or if you're seeing negativity and price is trading into that institution, rather wait for a break and close lower, get the blue line here on the R square to complement that, and then target your near-term, your support and resistance levels to the downside. Clearly no upside at the moment now, clearly because you can quite clearly see we've had a noticeable resistance level for a third consecutive attempt at the upside. So as it stands at the moment now, look for sentiment to the downside, and if that's the case, target back down towards where the light line is, because that's where our price support and resistance level is, and you're looking at roughly around about the 200 pip mark for this particular pair. So look for your entries and target those nice tight stops. So you're not risking a hell of a lot for a great return. So you're only risking 92 to make close to 200. Perfect 2 to 1 in this case. And bide your time. Look for the entry count on this particular pair and take it to the downside. So at the moment now, wait for the 1 hour close lower, stop above, and then target the downside for this particular pair. That's it for today, guys. Short and sweet, to the point. If you're following this particular template or any of the Serene Education templates, please follow the rules and back it up with sound money management. Just have a look and see if there's any fundamental news out today. We have French bank holiday today. We have Halifax PMI month-on-month figures for sterling. We have the German industrial production month-on-month figures. Yesterday we had some really great manufacturing figures for the German. Are we going to see the same thing here for the production month-on-month figures? If they do, then we should see some strong activity for the euro. If it comes out as negative as they're expecting it to be, then expect to see euro change in direction. This afternoon we have crude oil inventories, which is an important one for the US market. We also have the 10-year bond auction figures. It's 6 o'clock GMT this evening, then followed by the New Zealand unemployment rates and the unemployment change quarter-on-quarter figures for the New Zealand dollar. So there's some news out today. Not a hell of a lot, but there are some interesting ones that we need to be well aware of. Other than that, I'm going to leave you to it, and I'll catch you guys first thing tomorrow morning. Until then, you guys keep trading serenely.